Hello and welcome to the Crypto Jungle. My name is Baloo and I'm here to teach you how to trade and invest in cryptocurrencies using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? New videos released every Monday, Wednesday, and Friday at 12 p.m. Eastern Standard Time. So in today's video, these are all pre-recorded sessions. I'm going to go over the top 5 altcoins by market cap, breaking them down through the lens of the Wyckoff method. These videos are meant to be more of a tutorial. They're meant to be more of a proof of concept style video. We're going to cover accumulations, macro accumulations that happened at the bottom of the bear market. And if there's an opportunity, we'll talk about the reaccumulations at the current state of these coins. So 5 videos, 5 coins. Don't forget to hit the subscribe button. Let's just get right into it. So we're going to start with the number 2 coin, the number 1 altcoin, and that is Ethereum. So in the theory of the Wyckoff method, basically we're interpreting the market cycles. So there's a cycle low, there's a cycle high, and the cycle repeats itself, where the bottom is accumulation, the top is distribution. And what we're trying to do as a Wyckoffian is we're trying to position ourselves inside of the value zone, given certain signals that happen in the trading range. In the price candles themselves, there are these Wyckoff events. If you want to learn more about the Wyckoff events, you can go ahead and join the Discord. There is a link down below. Limited time, limited space for this free Discord. It's just a place where I've got these free PDFs that I've collected from the internet that kind of go over the basics of the Wyckoff method. So it goes over the Wyckoff phases, it goes over the Wyckoff events. So if you want to download that, pause the video, download that, and you can follow along with some of this theory. That would probably be one of the better ways for you to interpret this method. But let's go ahead and kind of draw a trading range down at the bottom here. So if this is our cycle low, this is the area that we want to focus on down at the bottom of the bear market. And then we'll cover the potential reaccumulation that could be occurring. Go ahead and zoom into that area. The Wyckoff method was invented by Richard D. Wyckoff back in the early 1920s, so the original stock market boom. And we're seeing a lot of YouTubers and a lot of influencers go over this method with kind of, they're holding a lot of weight on the schematic. The schematics are great, but it's a blueprint. And what the blueprint is telling you is to pay attention to the actual events. The events don't have to look in a certain way. They don't have to carry a certain structure to the event. It is simply an event. So with that, there's a lot of nuance and interpretation to this method. So the first event in the Wyckoff method is the preliminary support, the PS. If you're looking, if you're following along on the PDFs that are provided in the Discord, you will see that the PS is the preliminary support. So where is that event in this downtrend? Well, we began to kind of find support in this area. You can see how we flattened out before the true capitulation right here where the volume comes in. So we're going to make note of that area. I do have a lot of these labels already kind of pre-made, so I can go just drop a text there and I can go PS and boom, I've got my preliminary support level. And if you want, you can also just make note of that level. Depends on the trading range whether it holds a lot of value, but you can just drop a line right there and you can identify the preliminary support at $167 in Ethereum. Boy, I wish. Well, I got Ethereum down at these levels, but most market participants have not. After the preliminary support, you usually fall through that for the seller's climax. Seller's climax is your SC. Seller's climax is not always the bottom of the range, but in this case it is. So that's usually where I go and open up a parallel channel. So I'll drag that across, holding down the shift key to kind of keep it straight. And I'm going to open that up to the automatic rally. So the automatic rally can kind of be an area of interpretation for a lot of people. It's best to approach these accumulations in the later stages of their accumulation. So When you're in the bear market, if you're trying to find the automatic rally, or if you're trying to determine phase C or D and it's only been a few months, chances are you're a little early. So wait for this stuff to develop, wait for it to fully develop, and that where you think you're in the potential of phase C or potential phase D before you really hold any conviction here. And that's going to help you stay a little unbiased. So AR is the next step. AR is automatic rally. So we are in this area here making higher highs and higher lows until we get to a climax right here. Let's go with the candle body close. We're on the 3-day, so take that with what it is. And if you want, you can always just draw an area of resistance or just a general area, including the wick as well. So oftentimes I'll just grab a line on the wick and carry that forwards. Make it a dotted line. And we'll make it yellow to match. So it just kind of gives you a generalized area. There's a lot of flexibility in this technique. So that's our automatic rally. After the automatic rally, we are looking for a secondary test, and it looks as though we got a secondary test on top of our preliminary support. It's a good thing that we made note of our preliminary support. Oops, not preliminary support, secondary test, ST. When you get to your secondary test, that's phase A. Phase A is complete. So now it's coming together a little bit. What I like about the Wyckoff method, oops, almost dropped my mic there. What I like about the Wyckoff method is it helps you avoid a lot of fake outs, because you're always waiting for the next signature. You're always waiting for the next event to get that true confirmation that we're ready for markup. You don't buy the bottom, you don't sell the top, you make all your money in the middle. So it relies on patience, it relies on confirmation, and it will really slow you down, which is honestly one of the biggest things that a lot of new traders have trouble with. They have difficulty in being patient. So patience is the name of the game. It is the name of the game in this world of cryptocurrency or trading and investing in general. So, you know, a triangles break all the time. They break all the time. Sometimes they break bullish, sometimes they break bearish, and sometimes they fake you out. So it's the more common method is these patterns, these head and shoulders, these cup and handles, these triangle breaks. But if you don't know where you are in the market cycle, if you don't know where you are in the trading range, you're at a disadvantage. So learning this method does take a little bit more time, but your time is rewarded. And if you're interested in learning this method and receiving coaching, as well as a community full of fantastic traders and Wycoffians, links down below to join VIP. Okay, secondary test, phase A complete. We are now in phase B. So phase B got a little bit of an upthrust, which is typically a bearish sign. Now, in my group, what we teach is when you see a bearish sign, you make note of it. It doesn't matter if it's not one of the traditional labels that are in the schematics. You label anything that is relevant. We had an upthrust here. This upthrust failed to technically a sign of weakness. The sign of weakness was met with a lot of demand. So I'm going to label it both the bearish case, which is sign of weakness, but I'm also going to label it a spring, because what it did after was a confirmation of the spring. Spring's bullish, sign of weakness is bearish. But you know, anytime you come off of an upthrust and make a new low, it's a sign of weakness. What was this, by the way? This was the coronavirus pandemic dump. So it was an overreaction. It was an over bearish liquidation event to the downside that, you know, these things happen. They can kind of reset the trading range for you. They can reset your interpretation of what is bullish and bearish. So even though we're marking it in the chart, we did get bullish confirmation moving forwards. And the bullish confirmation was another form of a secondary test, which comes after the spring, called the test. This is in the Wyckoff schematics. A test after a spring is very bullish. So we came back inside of the range. We were already in the range, but we came back above the preliminary support and we tested. We got a successful test. Low volume. I usually like to see the volume increase by this point. So we didn't get a volume increase. We got a volume decline. But then we did get a sign of strength. What is a sign of strength? The sign of strength is the first time in this case, years, that you've had a macro higher high. This is the point at which you pay attention. The sign of strength after a spring and a successful test, pay attention, because what comes next is the backup. And if you get a successful backup, you have a successful Wyckoff trading range. That is the point at which you take a position. Like I said before, you don't buy the bottom, you don't sell the top, you position yourself for the middle. So let's go ahead and mark the sign of strength. After the sign of strength, you have to come down for an LPS. LPS is the last point of support. This LPS is also a part of the backup. So we're going to mark it backup. Backing up action. The backing up action is just testing the previous resistance as support, confirming the sign of strength, confirming the exit of the trading range, and confirming phase C is complete. Actually, phase C would be complete after the test. So let's go ahead and mark out phase C. And we are in phase D. And we got our phase E, which is markup. Now the backing up action can also be interpreted as its own trading range. I often do this is I'll look at the backup action after we get our sign of strength. We mark the other trading range. And you can see very similar action, very similar structure. We get our sign of strength, we get our test, and from that point on, we enter markup. And that is a Wyckoff accumulation range. This is hindsight analysis. This is meant for educational purposes so that you're better prepared and better able to interpret these trading ranges as they develop going forwards. I hope you guys learned something. If you enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any projects or questions that you would like clarification on, leave them in the comments section down below. And until next time, please trade safe. It is a jungle out there. Peace.